Are tech stock still overpriced? Data says no, mostly. Analysis based on comparison of stock prices and earnings per share. Many investors think big stocks are overvalued, but when we look at real data from 2022 to 2026, the story is very different. Some stocks were ahead of earnings at the beginning, but later earnings caught up. To see the details, I compared stock price and earnings on the same scale, using standardized stock price and earnings per share. Five big tech companies are included in the analysis: Amazon, Apple, Nvidia, Google, and Microsoft. If price moves ahead of earnings, the stock can be considered overpriced. If earnings catch up with price, the stock becomes justified. Key results are: before the last quarter of 2023 and early 2024, most tech stocks were trading above their earnings. Investors were pricing in future growth. But after that time, earnings began catching up. That means real profits are much more supportive of today's rally. Now let us see the trend of each stock. Microsoft. The blue line is stock price and the orange line is for earnings per share. And as you can see, earnings per share and the stock price for Microsoft is strong. The correlation is strong, and the calculated correlation is about 0.8. Prior to quarter 3 of 2023, stock price is higher than the earnings per share. And we can say that over this time, investors priced future growth into stock price. However, after that, the earnings per share is growing and it is higher than the stock price. And what this means is that the expectation that investors built in is reduced, and earnings per share is strongly driving the growth of the stock price. The next company is Nvidia. For Nvidia, the correlation between stock price and earnings per share is very strong, and that is about 0.96. And as you can see, prior to quarter 1 of 2024, the stock price is higher than earnings per share, which means that in this period, investors factored in a significant expectation of AI growth. However, after that, the stock price is lower than earnings per share. And what we can say is that now the stock price is no more overvalued, and the growth is driven by earnings. The next company is Apple, and the graph shows that there is no such a pattern between the earnings per share and the stock price for Apple, and the correlation between the stock price and earnings per share is about 0.5, which is strong. But because Apple is a matured company, stock price growth is not only determined by earnings, but rather by other macroeconomic factors. And then Amazon. For Amazon, the correlation between stock price and earnings per share is 0.86, which is very strong, and this is next to Nvidia. And as we can see, until quarter 4 of 2023, the stock price is higher than the earnings per share, and which means, same as Nvidia and Microsoft, investors expected a high AI growth, and that is built into the stock price. However, after that, earnings per share get higher than the stock price. Okay, basically showing that there is no overvaluation of Amazon stock price. Then Google. For Google, the correlation between stock price and earnings per share is 0.85, which is very strong. Okay, and as you can see, prior to quarter one of 2024, stock price is higher than earnings per share, which similarly means that investors built in a high expectation for AI growth. But after quarter one of 2024, earnings per share is higher than stock price, basically showing that Google's stock is not overvalued, and also earnings drives the growth of the stock price. So, having looked at this data, what can we conclude? In terms of correlation, we established that NVIDIA has a high correlation, NVIDIA's stock price has a high correlation with its earnings per share, and that is followed by Amazon and Google and Microsoft and Apple. Apple is the last one. Okay. Then the other observation is that original price movement was based on expectation of AI growth. Okay, and price in those time period was higher than the earnings growth, but this trend was adjusted later on, and especially post 2024, earnings per share is higher than stock price. And we can therefore say that currently there is no bubble or there is no overvaluation of stock price for NVIDIA, for Amazon, for Google, and Microsoft. Okay, and basically we can say that the trend shows that a market supported by a real growth. Thank you for watching. Please subscribe for more data-driven analysis, and also please provide your comment.